Hi, this is Stephen here from Share Navigator with your options and futures trade update. And today is October 29th. So you're looking at our SPY, our existing short put trade on SPY. So just to remind you, that's where we sold the $640 put option, which expires on November the 21st. We took in $500 in premium, and you can see that the current market value of that is only about $140. So we're up here, and you can see in the right hand side there, $357 per contract in profit. So this trade has gone particularly well for us, and we're just going to let that run. There's no reason for us at this moment in time to even consider taking that trade off. And if we scroll down here and look at the performance profile, you can see at the minute we've got a 99% probability of being in profit at expiry. So with still $140 left in premium on that contract, there's no reason for us to close out just now. Again, just to remind you, our break even is 638.60. So like the Mac, this would have to fall quite a bit. SPY is over 670, is close to 680 at the moment. So there's nothing for us to do here, really. And the great thing about this trade, again, what we're benefiting from here is a thing called time decay. And at this moment in time, there's $11.20 per day eroding out of the value of that put option. So we'll just let that run all the way to expiry. I want to line up now our next trade, which is on crude oil. So we're not ready to trade this just yet, but I want to just share with you what it is we're looking at trading. So we're going to go into the options chain for the crude oil futures. So remember that these are options on futures contracts. So we're looking out to the December the 16th option expiry, which is for the January futures contract on oil and crude oil. And at the moment, we're going down as far as the $52 strike here. So we're not ready to place this yet. So at the moment, we take in about $580 a contract, right, on this particular trade. And you can see our probability on this profit on this trade will be 89%. So right now, crude oil is trading at about $60 a barrel. What we're saying here is we're prepared to write an insurance policy on the crude oil futures contract at the 52 strike. In other words, if crude oil fell all the way down to $52, we would then take assignment of the futures contract, which expires in January. If it doesn't, we just keep the return here, which is the insurance premium. So remember, we're selling an insurance policy here. We're getting paid in advance right now for agreeing to buy somebody else's futures contract if, only if, the price of that futures contract falls below $52. That's the only time we will take assignment. If we do decide to take assignment, we can always take evasive action if we want. So this is the trade I'm lining up, right? There's about 48 days to expiry at the moment on that trade. The reason I'm just holding off at this moment in time is that I want to see does crude oil pull back a little bit more. So it rallied last week on the news of the tariffs that were placed on some of the Russian oil companies. We also had the news that there was the US strategic reserve was going to be increased by 1 million barrels. There was a lot of positive news out for oil prices, and oil prices rallied. And they're since starting to give away some of those gains. So we want to see just how far those gains drop first before we place this trade. But this is the trade we'll be looking at placing. If crude oil falls quite substantially, we might drop that strike price down to $50 a barrel. So we'll just wait and see if maybe over the next day or two. But I just wanted to line that trade up for you. So at the moment, taking in $600 a contract for agreeing to basically underwrite the futures contract at $52. As regards gold and silver, we made lower lows yesterday. Today, there's stabilization. The gold prices are up, silver prices are up, but we're not prepared to trade those yet. As we said, we probably want to see another 5 to 10% come off the value of those before we trade them. So, in summary, we're holding on to our SPY short put trade. It's gone really well for us. We're getting ready to place another short put option trade on the January crude oil futures contract. We're not ready to place it yet. We want to see just how far the gains are given away that were made over the last week. Okay, this is Stephen with your options and futures update. Thanks and bye for now.